The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 23rd magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Would love to hear from you. You can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 59 points. She's trading out 19,766. S&P is off 9 at 2262. NDX 100 down 7 points, trading at 50.56. The leading indice to the downside today is the transports, down 1 2/10%, 107 points. Then you've got the semiconductors. They're off 0.7%, 7 points is what that is the equivalent of. You've got gold up 0.9%, up nearly $11. Silver up about the same percentage-wise, 14 pennies to the upside. Light sweet crude back 36 cents out here. Leading the charge here, dollar-wise, the upside, you've got Google, then which is up $9. NetEase is up 7. Waters Corp up 4.50. Amazon is up 4. Two Cows Inc. is up $4 out there. No idea if I really pronounced that one correctly or not. Tesla is up 4. To the downside, it is AutoZone, not in a good zone, down $30. That's off 4%. Qualcomm down $8, 12%. O'Reilly Automotive down 7. Regeneron Pharmaceuticals off 6. Intercept Pharmaceuticals down 5. Transdigm Group down 5 as well. And would love to just simply take a look at anything it is that you want to. And I didn't see any requests prior to the show starting. So let's start off by taking a look at let's look at the general markets. Let's go see what they're doing. Let's start off. Let's go take a look at advanced decline oscillator readings out here. That is the bottom panel of the first 3 slides that you're taking a look at. New York Stock Exchange, the very left panel, NASDAQ Composite, panel number 2, panel number 3 being the Dow. And as we take a look at that bottom indicator, all are below zero. What that means is that these sellers are in control. It's not as if with a red market you needed me to tell you that, but actually you did. Because this is more than just, hey, what's going on today out here? You've got sellers that are in control of the market. Light volume, I'm sure. We'll go take a look at it by looking at some of the ETFs out there, maybe some of the sectors with inside the S&P 500 as an example. The lower right-hand panel out here is where you've got the S&P 500 at the top portion, and the bottom panel, we've got the VIX index. Key number for the market to get rolling to the downside is going to require a close above the 50-day exponential moving average of the volatility index. 1270 is a number. Right now, just testing and rejecting that level out there. The actual high today thus far has been, 1262. 1270 is the magic number to be looking for. So sellers are in control. They don't have a whole lot of emphasis out here. If we go take a look at that phasis, let's go take a look at volumes. Let's go look at the Qs to start with. Let me put up my my straight line calculator out here, we've done nearly 11 million, well, about 11 million shares coming into 1 o'clock. That equates to about a 20 million share day. Here are the cues. Let me turn off a couple of things out here. It's getting a little bit too cluttered, and you're going to say, man, you're making me dizzy by looking at all that stuff out here. In fact, let's get rid of the A to B equals CD pattern. That's that lightning bolt. So here's what the cues are and are not doing. What they are doing, 20 million shares, as we said, to the downside. They're really testing the junior swing point, the junior senator from January 12th. That's got 20 million shares, 19.6. So it's not exactly moving down with volume. And it is continuing to trade above the TAS daily profile top of the box out there, 122.97. If you close above that, that is a bullish versus a bearish sign out here. And that's what the Qs are doing. Let's go take a look at what's going on inside the IWM. Going to do maybe about 24 million shares out here. Certainly has been the weak link. Now, this is closing, has closed 2 out of the last 3 sessions. I don't know what's going to look like today as far as close, but could be the last 2 out of 3 sessions below the weekly. That's the green line out there, that weekly point of control. That's where both buyers and sellers are most comfortable with. That price point being the 134.03 level. Now, today's volume, as I say, should be somewhere in the 24 million vicinity. 2 days ago, we were down here was 34 million shares. About 6 days or so, we were down with 41 million shares. So you can see the IWM, not exactly, not unless some giddy up and not unless some, how do you phrase that? Not unless there's some volume basically coming into the close. Let's just make it simple out here. So the IWM, one of the weaker indices out here, does not have the gas to continue. Now it can continue moving to the downside out here, but it's not doing with any kind of velocity. If we go take a look at the Dow Diamonds, one of the other weak, so to speak, indices, ETFs out here, today's volume, 1.6 million thus far. That equates to about 3 million out here. Last time we were down was 3 million a couple of days ago on the 19th. Flirting with the TAS daily profile out here, but really going against a couple of nice volume days out here that had 7 million, 5 million, 7 million again out here. So it's pulling back with light volume. Those are the Dow Diamonds. Let's go finish this up and take a look at the SPYs out here. I just have to learn how to type the SPYs so far. Done about 34 million shares, 35 million shares. That equates to about 63 million shares out here. A couple days ago, down with 66. That equates to, I say, it's about 63. So again, you can see that there's not a lot of enthusiasm to the downside. The markets are doing what they're supposed to do. I hear these reporters, saying it's because of Donald Trump's first day up. But it wouldn't matter whether it's Donald Trump, whether it was the Pope, whether it was Hillary Clinton, whether it was you, or whether it was I. The tide says that the market moves lower out here. It has nothing to do with get it straight. I'm not referring to you. I'm referring to the folks that are blabbering about the reason why the market is moving down. In any event, you and I know this, but sometimes you just gotta state the obvious out here. Okay, so what are the markets? Where are the markets headed to? Right? That would be a good question. The question, of course, might be, what are they doing in the short term? So let's take a look at some short-term charts out here. Let's as an example, even though I've got the SPYs up here, let's go take, when we come back from this break, let's go take a look at the Dow and see what it's doing. YM on the 30-minute basis out here. Then we'll get to the 10-year note for cause in the den, and I'll check my email, see if anybody sent me an email with a request at steve@tfnn.com. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we were going to take a look at, I want to take a look at the Dow equity futures. I'm going to look at the 30-minute chart here first. Let me turn off the market profiles. Again, just a little uncluttering is nice. And the Dow made its top on January 6th. You may remember that day as a day when the Dow was trying to get to 20,000, just missed it by, as Get Smart would say, right? That much. Of course, that was the high inside the marketplace, and you and I called that. In fact, I did during Monday's segment on Tom's show at 3 o'clock as I was on, and everybody was celebrating and was certain that the Dow was going to get to 20,000. I said, well, today is going to be the top. Now, as if like I was some soothsayer, all I was doing was just following the normal pattern, the same pattern that says that, didn't matter what the day of the president was and who it was in place. The markets are basically supposed to head lower. However, it is inside the Dow that we do want to take a look at. What you can see from this 30-minute chart here is you certainly can see a series of lower highs, right? Very, very clear. And we can see a series of lower lows. However, it's this last low out here that is the one that is something that we have to think about. Why do we have to think about it at this stage? Well, first there was a nice little hammer candle that formed out here as we came into the noon time frame. Now, hammer candles can indicate that the market is trying to hammer out a bottom. Last time that a hammer candle showed up on a 30-minute basis here inside the Dow was 3 o'clock in the morning on January 23rd. That was one worth noting as well. That tended, or that basically marked a short-term bottom that was up until last night, or this morning, I should say, until 9:30 this morning, when the market went ahead and in essence tested that previous high out here. So there is an A to B equals CD to the downside. What qualifies it? But here's what really is out here: is you've got the 0.618 retracement. Right. So if we go from low to, I say right, you say, well, I don't know if it's a 618 retracement or not. But if we go from the low out here at 2 o'clock in the afternoon on January 19th up to the high that you and I are taking a look at, which is 9:30 in the morning on January 20th, between 9:30 and 10, it's a 30-minute chart we're looking at. We go from high to low, we can see that the 0.618 retracement level, which can, not always is, but which can be a place that acts as a not just support, but could in fact be a turn point. That priced at 19,672. Got a hammer candle right at that level, as we said out here. Does qualify really as a Gartley sell pattern. We're not going to get into it. So the question is, and this is where we will know whether or not the trend is changing. So just like 2 weeks ago, we said, hey, January 6th was the top. And we're starting to get into the range of when the market forms a bottom on an annual seasonal cycle. So it means we always have to be on the lookout for something like these out here, something like this as a signal. Now, that would then say that the 19,779 area would get taken out. There, that could be. It's potential out here. You want to just simply watch for it, because I don't know what the market is going to do any more than you do. But I do know if this goes on to make this pattern, which would be an A to B equals CD to the upside, then we've got to say, something to think about. That price target, by the way, would be the 19,838 type range out here. What is it that we should expect at least right now? Well, if we made a 0.68 retracement to the bottom, I would say let's just simply go take a look at from high to low out here and come up with what that value is to get an idea where is the market going in the short term. Well, area number one is always going to be your 0.382 retracement. We're hitting that as you and I are speaking. We did it probably about 3 minutes ago in the 19,709 range. The actual high was 19,704. We're going to cut it a little slack out there. If price gets above this 19,709, you should anticipate that 19,735 should be the level of potential resistance. Let's put those profiles back up on the screen. Brand new market profile appearing in this 30-minute session. And this says resistance is 19,718. Watch 19. Please check my microphone. I don't know what to do. My microphone is on. Is there a problem? It must be, otherwise you wouldn't have said that. So Steve-O in the den, maybe a little fine-tuning out there. Nope. Maria says everything is A-OK out here in microphone world. But anyway, watch the 19,718 area out here, because if price gets above that, then 19,735 becomes the likely target. You get above that, you probably go back up to the high. Says off. Back on, off. I'm not sure what to do there, but in any event, hopefully you can hear me. At least you can see my charts out there. But then, of course, my lips are just moving, and you're not sure exactly what it is I'm saying out there. But we are back on now. Okay, so that's a good thing. Okay, so let's watch, because and why are we taking a look at this? Well, I don't have that exact same pattern really inside the NQ or the ES, right? If we put the ES up here, I can't sit here and say, yeah, we've got a series of higher, lower highs. We just can't. It's basically been consolidating. So that's why I believe that the clue, and that's what you and I look for, is the clue. What's going to communicate something to us is really going to likely come from the Dow out here. In fact, in the case of the ES, you can clearly see an A to B equals CD to the downside of that form. This one is easier to see. That looks like this. Looks like about 1-to-1. Yeah, it was 1-to-1. That price target of 22.52. Now, the way that this thing moved off that C point should say that you've got lower to go, but you do have the bulls that have stepped in here. So it looks like the ES mini going to head to the 22.59 level. Of course, the normal movement of any A to B equals CD is the retracement of that entire pattern. Well, it just so happens a 0.382 retracement level, 22.59 ties right out to that TAS profile on a 30-minute basis. So it appears that that is where the ES mini is headed to. So let's take a look at it on the short-term chart out here. Now, we had a request inside the den. Said, Steve, would I be kind enough to take a look at the 10-year note? Let's go take a look at the 10-year note. Now, as we do this, here, you and I do this for the 30-year note all the time, 30-year Treasury all the time. Let's take a look at it with regard to the 10-year note. The top portion of the chart here is the Japanese yen futures out here, right? We're using the yen futures versus the currency pair just simply because, well, I don't have to worry about 10 minutes worth of delayed data out here. Now, what you're going to notice when you take a look at this, you're going to say, my goodness, Steve, are you sure you really put these are two different vehicles or instruments out here? And the answer is, yeah, they're slightly different out here. It's more of a directional, but my goodness, it is a important directional indicator. And you can see that when the Yen futures bottomed here this morning at 9:30 and moved higher. So too did the 10-year Treasury note out here. So that's really important. Now, why is that important? Well, it's important because if we go take a look at the daily chart here for the Japanese yen futures out here, what we're going to see is the possibility that this is setting up an A to B equals CD to the upside. So in layman's terms, or in Stevie's terms out here, which would be the same thing, all right, we can see that, number one, the yen futures are trading into a swing point from a few days ago, trading above a brand new TAS daily profile high. That's priced out at 0.8824. It closed above that today. That bodes well for yen futures. Likely, this is headed to 91 cents, 92 cents, 94 cents out here. And guess what that means for your 10-year notes and your 30-year Treasury? They're headed higher as well, courtesy of the Japanese yen. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 63, S&P down about 10 points as we speak right now. So since we went through that process there to take a look at the 10-year, take a look at the Japanese yen, that then bodes well for, of course, you know what else. That is called Goldilocks out here. Now, in the case of Goldilocks, moving higher in concert with the yen. It's not a pip for tick kind of a thing out here. It's a directional tool. But we do have gold futures right now taking on, what I guess we're going to call is the swing point, because there has not been much of a retracement out here. So, the 24% retracement, sort of qualifies. But in any event, price is trading above its weekly market profile. It's daily. Now, remember, this daily market profile formed a few days ago, and this was a bearish biased daily profile. It tells you just how strong the move is, maybe not volume-wise, maybe, but understanding that what's really moving gold is one thing. Curley would say, or turn to us and say, one thing. I mean, if there was one thing that we wanted to know when it comes to where is gold headed to, or the direction of gold, where are the 10-year notes, where the 30-year treasury is headed to, we just need to know one thing. One thing, which is the coolest thing of all. It just boils down to one thing. What is the yen doing? If you are trading intraday in these vehicles, then what you want to be able to have is the intraday chart of the yen futures, right? I mean, if we take a look at what are the yen futures doing on an intraday basis, there's a 2-hour chart, right? So sort of intraday. I mean, it's intraday because it's a 2-hour chart out here. Now, look, when price made a bottom, it was not singing in the key of G, it was singing in the key of F out here recently. And right now it's made that sixth move to the upside. But until price closes below Stevie's red line, that oscillator on change line, and it was a nice wide-ranging bar moving into the 12 noon time frame, all looks pretty good. 100% move got back up to the swing point. Makes sense that it's going to pull back. So this pullback that is underway out here is muy importante. Now, that means we need to go down to a shorter-term chart. So let's do that. Let's go take a look at a 30-minute chart out here, get a feel for what it is doing. And on the 30-minute chart, what this tells us, let's just simply get rid of the wave counts that are out here so you can see at least how Stevie takes a look at this, right? So we'll start from all the way down here where we can start doing our wave counting. We can see that we're beyond wave number 7 because you got a letter H on here. That H just tells me, hey, guess what? We have gone beyond that. So the real retracement that occurred inside of yen futures, I'm going to start from wave number 6, and then I just start the recount to the upside here. So it says we are only in a wavy number 2 out here with more to come. So looks like on a 30-minute chart, there is an A to B equals CD pattern to the upside. Now, yen futures can easily pull back. They're trading below Stevie's red line out here. No reason for them to not pull back to the 0.8828 level. But first, it's got to get down to 0.8846, which may be the end of its very short-term retracement. That happens to be the top of its 30-minute market profile out here. But you put a 30-minute chart or a 10-minute chart, you put all these side by side, and I would suggest to you that this is the key. This is the answer key. This is like getting a test, but giving you the key ahead of time. So you really want to be paying attention to what is going on inside of the Japanese yen. As far as Goldilocks and the 30-year treasury, I don't mean to harp on it, but as we take a look at charts and patterns out here, that's the one that is like, it's so clear, you just want to slap your head or pat your head in order to be able to gauge where these different instruments are going to. And until the correlation stops, which may not stop for a long time out here. Why? I don't know. We got to pay attention to it. And gotta, being a very technical term for trading out there, you just gotta pay attention to it. Okay, and if we go take a look at, by the way, let's go take a look at what some of the equities are doing inside of the mining sector out here. Barrick Gold, right, number 1 weighted stock inside of the GDX. We look for volume out here. This too becomes a little bit difficult to figure out, where is the lightning bolt pattern. You have to say that the B point happens to be January 5th, which, from a volume perspective isn't good necessarily, because today that swing point, by the way, number one sector, 26 million shares, and today you're at 12 million. I don't need to do a straight line on that. I know that the math just doesn't equate to passing a B point, which it's doing with more volume. It's light volume. And the reason why I say that's the B point out here is because of this little retracement down here into January 11th. Nonetheless, price can move higher. In fact, in this case here, with regard to the mining equities, with regard to gold, I'll just say volume, small, because it's going to be the direction of that yen that is really going to control what these other instruments are doing here. And not that we wouldn't like some types of confirmation, even if we had confirmation. And if the yen were to get schnookered and start moving to the downside, it wouldn't matter what kind of A to B equals CD pattern we have out here in Barrick Gold or we don't have. They just won't really withstand the pressure, at least directional pressure. Doesn't mean they fall apart. Not at all. That's a whole different scenario out here. But and the number one weighted stock inside of the GDX isn't giving us the all hands on deck symbol. If we take a look at Newmont Mining number 2 out here, the swing point it's dealing with has got 10.5 million. You've done 3.2. It's not enthusiastic as it moves into that level. You guys know the drill. You can go take a look at it. So we don't exactly have the volume that those that are long mining stocks would like to see out here. Nonetheless, it still looks really marvelous. I mean, very Marvy out here. It's so Marvy. It's a sector that you should be in. Hey, plus what you should do is, I don't know what day it is that Tom is doing that workshop. I know he's doing a workshop, right, where he's going to take a look at all things with inside the ETFs, because we can't share that enough with each of you out there when you're trading the ETFs, understanding, what's going on inside of them. And oftentimes it's really just having to really take a look at the top 10 holdings, to figure out what the entire sector is doing. Then you can start looking for other opportunities with inside some of the other stocks out there. Like take, for example, the XLF. We should take, for example, the XLF. In fact, let's take, for example, the XLF. Let me open up a file out here. Let's see if I can do this here very quickly. XLF. So here's the XLF. All these individual stocks, by the way, on the left-hand side, in order, and probably as of a couple of days ago, these are the holdings inside of the XLF. So the XLF is made up of 63 individual stocks, with Navient Corp being the smallest weighted stock. NAVI is the ticker symbol. If we take a look at what is the smallest weighted stock inside of the XLF doing out here, we'd say, come on, populate. Give us some information out here. Oh, nice little hammer candle that it formed back on January 18th with 6.8 million shares going into 12 million shares. That looks pretty tasty out here. In fact, if you were looking to get into the financial sector, I'd have to say that this looks like could have even been an A to B equals CD to the downside. I don't have that tool on here. So let's go add that tool, insert study. That means exit stage left. Let's put that on there. There we go. And your A point was out here. Your B point was here on the 14th. Looks like your C point out there. Yeah, 1-to-1 A to B equals CD with a hammer candle and a TAS market profile on a daily basis that's set up with a bullish bias. Ideal buy would be 1546. Don't know if you'll get it or not. And this would target 1705. That's the least weighted individual stock inside of the XLF. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So that workshop that Tom is doing is this coming Thursday, 6 to 7 p.m., teaching you how to trade the nugget, the nougat, the NUGT, and dust, DUST. So being able to go long and short the either inside the mining equities out there, but really focusing in on those ETFs and helping to become a master of it. So I hope that it's free. Actually, there's cost. The cost is not attending. If you trade any of those vehicles and you don't attend, you got to ask yourself why. You don't even have to be there live. You can sign up for it, and then on Saturday or Sunday when you're sitting around and there's nothing to do or what have you, you can just watch the workshop and reload. I mean, it doesn't get much better than that. Now, we were taking a look at when we began the show, right? We were looking intraday at the Dow Equity Futures contract. We were looking at the ES Mini, noticing the intraday pattern that had formed out here, and during that time period where I was blabbering, the targets that you and I identified out here inside the Dow Futures, we got a wide-ranging bar. This bar doesn't complete for another 17 minutes out here, if I have my math correct. And it's coming in at 19,735. So it's hit that target, but with widest ranging bar. But it is hitting this swing point here. So we need to watch what takes place here over the next 15 minutes and then the 30 minutes that follow that. We really want to be watching this 19,779 area, because if Dow Equity Futures are able to take that out, it easily could be setting up an A to B equals C to the upside. Not that there can't be another retracement, but it really does say, man, we got to think about this, because now we haven't seen on the 30-minute basis, by the way, since the top in January 6th out here, we have not seen an A to B equals CD to the upside unfold. It has not occurred. Doesn't mean, and we don't know if it's going to occur this time either. But those are the types of things that you want to look for to see if there has been a change in trend in either direction, whether you're looking for bottoms or you're looking for tops, whatever it might be out here. I just know that we've got a widest ranging bar inside, and we want to we'll get that message from the Dow, I believe, more so than, the ES Mini, which, by the way, is targeting, got the TAS daily, the TAS 30-minute profile. It's where it's basically trading right now, 22.64. 22.59 was the wait, what am I talking about? Is it 22? No, top of the box is 22.59. It's trading at 22.59, and but it's moving in there with a decent sized type bar out here. So looks like the next target of 22.64 is likely next up for it. That's on the ES Mini. Okay, we did have some questions that came in, so I really should just get to those. So give me a moment here, and this is from Rose. Rose wants to take a look at XLRN. And, you know, Rose, for tomorrow, we are going to play a special tune for you, one of my favorite tunes out here. So I know our guy Steve-O. This is before the show starts, you know, so you know you like to tune in and listen to music out here. We are going to play Ramblin' Rose out there. We're going to do that for Rose, who wrote in and wants to take a look at Accelerin Pharma Inc. Ticker symbol here is XLRN. Now, Rose is clearly looking for a bottom out here. So here's what we know about Acceleron. Had a nice breakout session back here on November 9th. That was the big volume. Price came back to the gap, the breakout session. Bottom of the candle actually came all the way back to the swing point. Here's the problem. The swing point, by the way, November 3rd, volume of 355,000 shares out here, and price is trading below it on light volume. That was up until Friday when it had 454 million shares to the downside. Now, Rose, if you want to go ahead and take a stab at it, then I would say go ahead and take a stab at it. Wow. How that is just amazing advice that I just gave, is it not? No, the reason why I suggest that, if you're looking now, my preference would be, hey, did you hear that little pitch out there? The preference would be that price would get back into what we would like to refer to as the upper part of the range, right above that swing point from November 3rd out here. That low, by the way, is 24.77. The reason why I say, you know, go ahead and take a stab at it if you want, a small position, is because you've got a brand new daily profile that formed today. This daily profile out here suggests that it is the bulls in charge of the price area between 24.19. You're trading at 24.53 all the way up to 25.93. Now, I don't know if it's a long-term trade, short-term trade, what the time frame it is that you're looking at out here, but it is in essence with lighter volume came back to a breakout area. You know, let me put this on a weekly chart, see if there's anything else maybe that that pops out up here. WW. So the volume that it's dealing with had 2.3 million shares, and last week was 1.5. So there's another reason for you and to take a look at maybe XLRN out here. I don't know where you're thinking this might head to. If it could clear 25.93, you're going to have to watch the price level of 30.22. So, you know, I'm assuming you've done your work on this. This is just with like 2 minutes of work max in taking a look at it, but at least take a look at that daily profile. That may be the wind at your back. Rose also wanted to take a look at AKRX out there. AKRX. RX, I'm going to assume that this is also another type of pharma stock. Acorn Inc. Actually, I can't assume that. Now, Acorn Inc., this is interesting chart as we take a look at it. This had a breakout with decent volume on December 12th, 3.9 million shares, and it is pulling back into that area with light volume, 471,000 shares today, 2 million shares a couple of days ago, but that 2 million going against 4 million shares, so still coming back with light volume. The bigger problem that you have with Acorn Inc. is it's just coming back to the gap, the breakout area. It's a wide-ranging bar with volume. What we don't know, Rose, is whether or not it's going to come all the way back down to the bottom like the previous instrument that you and I looked at. So, you know, what do you do out here? I say you sit tight on this one, because the support level is really going to be that swing point from December 7th, the test of that area on light volume. That could be anywhere from 1894 to 1761. So I'd say keep watching it. You have 2-3 signs of strength out here, really. You've got the gap up, the wide-ranging bar, December 12th. You also have this other one that's really nice up at the high on January 4th that had 2.5 million shares. So you do have your signs of strength. Your biggest problem here inside this equity is going to be, I don't know what happened on November 3rd, but it wasn't good. You've got a supply line out here that runs from 26.32 down to 19.90 out there. And so it may be some tough slogging. Slogging being a technical term for difficult to get through out there. So, it's going to take a while for this thing to really move to the upside is what it looks like. So watch, I'd say, at this stage here, unless we see something different happen. Your entry point would be around the 1894, 1761 level. Maybe you try to build a bear out there. You build a position. I didn't mean a bear, but maybe build a bull. S&P wants to take a look at VRX. Was that Valiant Pharmaceuticals out there? VRX. Let's go take a look at it. So this thing here pulling back into basically its weakness out here, its swing point, which had 96 million shares on November 8th. You're pulling back with light volume, 14 million shares. The prior test of that level was with 41 million shares. So you're really pulling back with light volume. It looks like the sellers are sort of gone from Valiant. So your downside potential, it's coming into downside. It's really, your trading range, I should say, is between the 1370 and 1875 area. A little sign of strength out here on January 10th. Maybe worth a trade. Steve Rhodes, TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. The only other email I see is from Tom asking about the yen and miners and so forth. So I'm assuming that came in prior to when I was chatting about it. So I think we're all square there. At least I hope that we are. But longer term, what we see here is we see them all rising. Gold, the yen, and the treasuries out there, the 30-year, the 10-year, and then until the yen starts to fail, that's the that's the game plan. Okay, so let's go back and take a look at the XLF out here. We looked at the weak link, not the weak link. We looked at the least weighted stock inside of the XLF. Berkshire Hathaway is the number one waiting out here. So let's go see what it is doing. And in the case of Berkshire, volume today about 1.9 million shares, trading just below a TAS daily profile that formed on Friday is what it looks like. Coming back into, the area where they all really broke out. Hasn't gotten back there yet. That would require moving down to about 156.61. You're trading right now at about 159, even Steven, somewhere right around there. This looks like, let me put this on a different, I'm not going to put this on a different chart. I won't have, looks like this still wants to pull back a bit out here. So I would say the target range for the move lower here is about 158.07, could even be 153.48 as the range. So we don't see anything. That's number one weighted equity. JP Morgan is number two. That's up 18 cents today. But is there any, and it looks nice and strong. It's trying to target, though, perhaps the November 14th high of 80.44. Perhaps. The reason I say perhaps is because it looks like the next bottom, if this breakout is real, not surreal, but real, looks like this 82.73 area ought to hold. And we're just really pennies away from that area. That being we're at 83.84 versus 82.73. So that may be the buy with regard to JP Morgan. With regard to the ETF, you're going to want to understand what the weighting of probably the top 10 here represents some significant percentage. I don't know. I don't have that data in this little chart here, but I've got each one in order, weighting Wells Fargo being another one. If we take a look at Wells to see what it's doing out here, Wells today has some really nice support at this 53.98 area. Today, moving down volume 10.6 million shares. Last time down was 21 million shares. So light volume pullback, and the XLF being the second weighting inside of the S&P 500. Let's go take a look at the number one weighting, see what the Sam heck that is doing. That would be the XLK. Volume so far about 5.9 million shares. It's trading sideways out here, and it's trading above its TAS daily profile. So all it's done is pulled back to test a level of support, that being 49.66 out here. And the XLK most certainly has not rolled over, and that's the number one weighted sector inside of the S&P 500 out here. It does not mean that the markets don't have more to give. It's just that versus last January, as an example, the give and take has not been a tremendous amount, and that really should bode even better for the bullishness of the stock market when that next cycle bottom comes in. And if you tune in at 3:15 on Tom's show, I'll give you some thoughts on where that might be. And I'd say you'd want to tune in to get that, because we just haven't gotten to that right now. We're off the air in about 2 seconds or so. I believe that's when the countdown begins. So Dow's off 40, S&P is down 8. Make sure you sign up for Tom's workshop on Thursday. Tune in at 3:15 today. I'll give you my views on when the markets could actually be forming a bottom out here. If we were good enough to say January 6th was a top, you probably want to listen in. So have a great Monday. Stay tuned. Our favorite polar bear, David White's up next. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.